Bonjour, bon après-midi à tous.
Good.
Welcome to the joint meeting of the Standing Committee on Industry, Science and Technology and the Standing Committee on Finance. I'm here with my co-chair, Mr. Rajat, who is the chair of the House of Commons Standing Committee on Finance. My name is Michael Chong, and I'm the chair of the Standing Committee on Industry, Science and Technology. Pursuant to Standing Order 108, subsection 2, we are studying credit card interchange fees and the debit payment system in Canada, and today I'm pleased to welcome two representatives of Use My Bank Services, Mr. Brian Crozier, co-founder and of Use My Bank Services and responsible for global business development, and Mr. Joseph Yuzo, who is the Chief Executive Officer and also a co-founder of Use My Bank Services. We're also pleased to welcome from Moneris Solutions, Mr. Jim Baumgartner, President and Chief Executive Officer, and Mr. Fern Glowinski, Ms. Fern Glowinski, my apologies, Senior Vice President, General Counsel, and Corporate Secretary. From TD Merchant Services, we're also pleased to welcome Mr. Jeff Van Dijnhoven, who is the President of that company. Welcome to you all. You now have a chance to provide some opening remarks. We'll begin with Use My Bank Services.
Thank you. Firstly, we'd like to thank the committee for the opportunity to present our view as a Canadian online payment service provider of the online electronic transactions business in Canada. My name is Brian Crozier. I'm the Global Business Development for Use My Bank Services, and we're from Toronto. And I've been in the online payment processing business for over 12 years. And my business partner and CEO of Use My Bank, Joseph Yuzo, has worked for major Canadian banks for over 20 years. Joseph has extensive knowledge of the technical capabilities of the Canadian banking system, as well as all aspects of security, transaction processing, the self-service arena of ATM, POS terminals, as well as telephone and internet banking. Use My Bank is a Canadian online bank service provider for online merchants and billers. Our core technology provides an easy way for online merchants to transact in real time with their customers using online banking. Consumers that are using a merchant's online checkout may choose their online bank and can make a purchase or pay a bill in real time. We launched our service in 2002 and have processed millions of transactions for Canadians with a good funds rate of 99.99999. Use My Bank has pioneered online payments several years ahead of the Canadian banking institutions, and we were able to accomplish this by leveraging the existing online banking systems to perform real-time payments. We have since expanded our service to hundreds of banks across 10 countries. And this real-world experience gives us at Use My Bank a global view of the best online payment practices that we can share with the committee members. The business of making payments in Canada is largely controlled by a handful of financial institutions that many believe constitutes a monopoly that stifles competition, which is the very lifeblood of Canadian business. E-commerce is an important and growing part of the payment industry in Canada. Payments to online merchants and billers are now in the tens of billions of dollars, and many merchants and consumers would like to see more available choices when making these online payments. With so little competition in the Canadian payment space, a tradition of in-house sales of merchant services with the largest payment processor, Moneris Solutions, being owned by two of the largest banks, not to mention payment tech and global payment systems have taken over where the mergers were not allowed. It's not difficult to understand why new independent businesses face an uphill battle to offer service. And Interac, Canada's near-monopoly debit network, as well as Visa and MasterCard, are in the business of processing online payments. We believe it's in our country's best interest to offer consumers a choice by having as many suppliers of online payment services in Canada as possible, thus ensuring the quality of service as well as fair market prices. And since 1989, retailers in Canada have been accepting debit payments at point-of-sale terminals for pennies per transaction using Interact. Then, in 2006, Interact launched Interact Online, charging merchants upwards of 2% or more per transaction. Canadian online retailers and billers require a greater variety of options when accepting payments from their customers, more than the current 4 banks that Interact supplies. For example, the Canadian travel and airline business processes billions of dollars in transactions each year online. This industry currently finds itself between high credit card rates and Interact Online's position of placing them on a restricted list. These retailers are unable to accept direct payments from their customers using online banking. And Canada's clearing settlement system is among the most efficient in the world. The Canadian Payments Association operates national clearing and settlement systems for all checks, wire transfers, direct deposits, pre-authorized debits, bill payments, point-of-sale debits, and online payments. Transactions that are charged to credit cards are not cleared through CPA systems, thus the CPA rules don't apply to them. And our company, Use My Bank, has met with the CPA to bring them a better understanding for the need of alternative forms of online payments and the benefit that such technology offers Canadian e-commerce. The rules ultimately drafted on this measure excluded not only Use My Bank, but many other innovative companies from participating in the Canadian payment sector. From its initial launch, Use My Bank has made every effort to be an active participant in the payment processing industry, both in Canada and abroad, and have assured that our goals and objectives are both heard and understood at both the regulatory and the levels of the financial banking industry. The same scenario has been replayed time and time again with every group that has been charged with the responsibility for governing the Canadian payment industry. Sadly, innovations that could offer Canadian merchants safe and cost-effective ways to build their online business are being stifled while other countries begin to surge ahead of us in this sector. We believe that the banking system in Canada should have the regulations that foster competition and innovation, similar to the telecommunications industry today, enjoying more services and lower prices as a result of allowing more competition to enter a market that was once a monopoly. In 2006, the Bank of Nova Scotia became a defendant in a case brought before the Competition Tribunal. It was alleged to have illegally reduced competition in the online debits payment market. The bank won the case, but the plaintiff, GPay, without cooperation from the defendant and other Canadian banks, was unable to remain in doing business. GPay was once our payment processor for Canada at that time. At one time, Canada was the #1 consumer adoption and usage of ATMs, POS terminals, and debit transactions and online banking. We no longer are #1, and as many of these other countries have surpassed us. Since 2002, the banking industry has not been as responsive to changing market conditions and expectations. Their policies and tactics have attempted to restrict the market by manipulating the rules and regulations through lobbying the CPA, CBA, other government agencies. But it is possible for Canada to regain its lead in the payment industry. However, it requires an environment that rewards entrepreneurs for creating the next big ideas and companies. We hope that the committee can make this a more friendly and competitive market for online payment service providers and their millions of Canadian and global customers. Thank you.
Very much, Mr. Crozier. We'll now hear from Moneris Solutions and I believe from Mr. Baumgartner.
Thank you very much. And thank you for the invitation to speak to the committee regarding the study of credit and debit card industry in Canada. We appreciate the opportunity to appear before you and share information with you in support of your study. I'm Jim Baumgartner, President and CEO of Moneris Solutions, and with me here today is Fern Glowinski, our Senior Vice President and General Counsel. Moneris Solutions is a Canadian-based payment processor with operations in Canada as well as the U.S. Our head office is in Toronto, and we also have offices in Sackville, New Brunswick, Montreal, Calgary, Vancouver, and throughout the United States. We've been providing credit, debit, and gift card solutions to merchants in Canada and the U.S. since December of 2000, and we process for approximately 350,000 merchant locations in Canada and close to 65,000 merchants in the U.S. Moneris is a joint investment of the Royal Bank of Canada as well as the Bank of Montreal. We distribute our products and services to the market directly through various sales channels. Moneris employs approximately 1,800 people, the vast majority of which are right here in Canada. As our role in the industry tends to be the least understood, I'm going to take a moment, if I could, to briefly describe what we do. Firstly, we enable merchants' acceptance of electronic payments by providing cardholder facing solutions, which may be a standalone device at the point of sale or enablement of a cash register at the gas pump, a kiosk, or even a website. Secondly, when a card is swiped or inserted in the chip context, we route the transaction, the authorization request, through the payment brands to the card issuer, who send back an authorization message that we in turn deliver to the merchant so that the merchant knows that the customer is authorized by the issuing bank to complete the transaction. Once the transaction is authorized by the card issuer, the merchant will finalize the transaction with the cardholder and send us a settlement file, which prompts us to settle funds into the merchant's bank account for that day's transaction activity. An important component of our business model is merchant underwriting, as we bear the risk where the merchant does not deliver the goods or services that have been paid for in advance. For example, where a cardholder purchases an airline ticket and the airline goes out of business prior to delivering the flight, and in the case of merchant fraud and noncompliance with the payment brand rules. We also provide reporting to enable the merchant to monitor their transaction activity for the purposes of operational and financial reconciliation, as well as fraud monitoring. Another important element of our service is exception item management, including the tracing of individual transactions to mediating on behalf of the merchant in the case of a transaction being disputed by a cardholder. As a whole, these components are the payment processing value proposition. Payment processing is often the last interaction or final impression between the merchant and the consumer in the shopping experience. Therefore, it has to be instant, always on, and easy to operate. It is critical in enabling cash flow, and therefore the merchant must receive funds when and where they want them and have certainty of payment. The finality of payment feature in today's market, certainly in uncertain times, removes a large amount of risk from the equation, and also handling large amounts of cash. The payment processor also plays a leading role in the integrity and the evolution of the electronic payment networks for the introduction of enhanced verification tech terminals such as chip, or data security standards such as PCI, or new card entry modes such as contactless. The processor must upgrade its infrastructure. Now, these are no small tasks. They're very capital intensive, and they're very complex undertakings that have helped Canada maintain one of the most ubiquitous, secure, and successful networks in the entire world. As an industry, we're subject to increasing liabilities associated with potential data compromises. A number of high-profile recent breaches in the U.S. have highlighted the threats posed to the digital infrastructure. The reality is that the cost of compliance and ensuring security with the payment system is continuing, and the increasing threat of breaches and fraud continues to evolve. The Canadian payment processing market is highly competitive. Most of North America's top processors actively market in Canada. Significant established players regularly enter the market. U.S.-based merchant processors now control a significant percentage of the Canadian market. In addition, there's a robust reseller industry that offers even more choice to merchants. Our industry is forced to compete on price and innovation to maintain our market position. And at this point in the evolution of the payment card industry, card acceptance is roughly equivalent to the growth in the retail economy. And it is essentially a zero-sum game, requiring each industry participant to strive to be the most relevant to their merchants. We negotiate fees with merchants directly. In terms of merchant acceptance of cards, merchants have a choice about acceptance and do so because of the significant value that they receive. From electronic payments, including avoiding the costs associated with handling cash, reporting and reconciliation, finality of payment, speed and throughput at the point of sale, and increasing customer satisfaction by offering their customers a payment method of choice. There's been much discussion about interchange, and as you may know, it is the fee that's paid by the payment processors to the card issuers. In our pricing model, it is a component of our cost of goods sold. Payment processors do not set interchange rates. We are advised of them by the payment brands. Other components of our cost base include the assessment fees that are paid to the payment brands, as well as our operating infrastructure. There's also been much discussion about the introduction of competing debit products in Canada. As payment enablers, we have to invest in the infrastructure to process new acceptance products from card issuers, because we expect that at least some of our merchants will want to be able to accept the card that their customer presents for payment. As a result, we must develop the technical acceptance capability, build business processes, commercialize and inform and train the merchant. New products attract a greater compliance burden, greater wear and tear on our hardware, as well as additional risk and exception item management. We hope our remarks have provided some helpful insights and look forward to answering your questions, and thank you again for the opportunity to be here.
Thank you, Mr. Baumgartner. And finally, we'll hear from Mr. Deinhoven.
Thank you, Mr. Chair. I appreciate the opportunity to appear before you on behalf of TD Merchant Services. Payment systems are obviously a complex topic, but I'm happy to do what I can to help explain the process and explicitly the role that a merchant acquirer plays within that system. In the simplest sense, as acquirers, we provide our customers with point-of-sale payment devices, the hardware that sits on the counter in a store, and we process payments on behalf of the retailer. Major merchant acquirers or payment processors, including TD Merchant Services, Moneris, Global Payments, Chase Payment Tech, and Desjardins, provide essentially the same set of payment capabilities to merchants. But we compete with each other primarily based on two things: the quality of service we provide and the price that we provide to that merchant or charge to that merchant. TD is the only Canadian bank that currently operates a merchant acquiring business. The reason for this is quite simple. We believe that it is a relationship business, and we appreciate having a direct relationship with retailers and business owners across Canada. In fact, over 85% of my clients are also clients and customers of TD Canada Trust, illustrating this relationship aspect for us. In terms of pricing, as the committee knows, interchange rates are set by the payment network companies, Visa and MasterCard, and they both make these rates available via their websites. Both have stated their intention to enter the debit market in Canada and have communicated the interchange rates associated with accepting those debit cards. Acquirers take these interchange rates, determine our own additional direct costs, and then develop a comprehensive fee structure that we present to merchants. The cost of interchange is by far the largest component of the merchant discount rate. In the past, we presented costs to merchants via a simple, often all-in merchant discount rate. That is, the all-in cost that a merchant would pay per transaction processed. This was feasible as the interchange rate structure was simple at the time. The payment networks have since changed their interchange rate structures to a more complex model that have different rates for consumer, premium, and business cards, as well as for online or other card-not-present transactions. As a consequence, acquirers also revisited pricing approaches to merchants. TD Merchant Services completed this task in time for the introduction of Visa interchange rates in April of 2008, and this was a significant effort and completed at considerable cost to my business. This committee has heard testimony to date regarding transparency on the part of acquirers. As part of our submission to today's hearing, we provided the committee with samples of notification letters that we sent to clients to illustrate the approach we take to articulate any change in a merchant's processing cost. I'd like to highlight to the committee as well that these letters are from 2007 and 2008, before Parliament began its studies on this matter. Quite simply, it's the way we do business. As illustrated in these letters, we introduce new fees or changes to current fees arising from the interchange rate structures made by Visa, and we provided appropriate examples to ensure merchants understood the impact of these changes. At TD Merchant Services, we are proud to provide our merchants with what we believe is a clear and transparent statement of their monthly activity. I've shared a sample of this statement with the committee and have highlighted the Visa discount rate adjustment box which lists the number and dollar amount of all transactions for which a rate in excess of the merchant discount rate has been applied. This section of our statement also clearly identifies the type of card used, for example, an infinite card or a commercial card, in plain English, not via the use of codes or other more obscure terminology. This section also identifies the increase in the rate associated with the processing of these transactions and the sum of the additional charges for each card type processed by that merchant. To reiterate, I know some organizations have complained that there is a lack of transparency at some points in the payment process. From my perspective, I believe that clients of TD Merchant Services have a clear picture of the fees that they are paying for the transactions we process on their behalf. In fact, delivering quality service and communicating with customers in a clear and transparent manner is a key tenet for both TD Merchant Services and the entire TD Bank Financial Group. As an acquirer, TD will continue to bring the latest payment options to our merchants. However, as these options are introduced, history would suggest that to be viable, any innovation needs to create value for all stakeholders in the payment value chain, whether they be issuers, consumers, merchants, or acquirers, as without the acceptance of all of the parties involved, these innovations are likely to fail. As change evolves, we will continue to consult with our customers, presenting new options to determine whether they are of interest to them, as well as educating and training their staff on how to use the new technologies. Throughout this process, we will continue to communicate clearly so that merchants know exactly what they are paying for and that they are getting value for their money. As payment processes continue to develop over time, TD Merchant Services will not change our strategy of offering customer-focused, price-competitive, high-quality services to our clients in a transparent manner. Thank you, Mr. Chair, and I'm pleased to answer questions.
Merci, Monsieur Van Dijnhoven.
Thank you very much, sir. We now have an hour and a half for questions and comments and answers. We operate in both official languages here. There are some members of Parliament who will be asking their questions in French, others in English.
Commence with Madame Cody.
Thank you very much, and thank you for your very clear presentations this afternoon. I appreciate the time you've taken to present to this joint committee. I have a series of questions that I'd like to go through, so brevity would be asked, if you don't mind, just because there's such a lengthy list of questions. I'm going to start with the credit card side of life and ask a couple of questions around, did you have any influence on the interchange fees at all? Did you, when Visa and MasterCard were making changes to the interchange fees, I think I know the answer, but I want to hear it from you. Did you have any influence?
From our perspective, no.
And I would say the same. No, none at all.
When the increase in fees, when the changes were made to the interchange fees, I think TD has already indicated that they also changed their pricing model to merchants at the same time. Did you see any increase being paid to you because of the changes in the interchange fees and then your change in pricing models? Did you change your pricing model, Maneris?
Yes, we did.
At the same time?
Yes, as the more complex interchange structure was introduced, we did change our pricing structure in response to that. I can tell you that overall, from when we started the company, first full year was 2001 to 2008, the difference between what we're charged in interchange and assessments and what we charge our merchants has come down. So what we call our gross spread in basis points has come down from 2001 to 2008.
In terms of the interchange rates?
And your change in pricing model, how did that affect your business?
Yeah, so as I said, we went from, when interchange changed from 2 rates to 21 on the Visa side, we had to look at our pricing. Some merchants did see increases, but others saw decreases as well, depending which industry they were in, the type of cards that they processed, how they processed those cards. So we had customers who moved both ways.
Would you say there's one particular industry that was affected more than others?
Industries that more from a transaction size. So those industries that had a higher transaction size benefited and those that had low transaction size, like quick service restaurants and those sorts of things, they saw the biggest price increases.
Would you say there's been a big impact to your businesses on the premium card introduction in terms of negative or positive price-wise? Any impact at all?
Perspective, it required a significant investment in infrastructure. Our system was not capable of handling the complex interchange structure that was traditionally more common in the U.S. When that was introduced here, it required an investment in the tens of millions of dollars to be able to handle.
Do you think the merchants bore any of that cost, or do you feel that you bore most of it?
I'd say a combination of both, quite frankly. As I mentioned before, our spreads have come down since we started, and so we definitely have borne some of it. But the merchants are paying more as well, and there's no doubt about it.
I want to move, just in the interest of time, to the debit card side of things. There are a few questions I want to talk about, mostly around, first of all, could you explain priority routing that you're aware of? Are you aware of priority routing?
On the debit side?
Yes.
Sure, I can. And I'll try to be brief. Cut me off if I'm not brief enough. So priority routing refers to a practice where if you had a card that is an Interac card today, and let's say Maestro was added to the card, the instructions from the issuers would say, please route this to Maestro as opposed through an Interac transaction. The card brands have taken different approaches on this. Visa, more recently, has said we're going to allow consumers to choose. MasterCard is asking the banks to indicate where they would like their customers' transactions routed through. So they've taken different approaches, as they will do occasionally.
Have you been approached to program terminals in either to ensure Visa or MasterCard? Are there any inducements to ensure one priority routing or the other for either TD or Moneris? In
our particular case, with Visa, they have offered us an incentive to develop Visa debit. However, we've not elected to roll it out yet because we're not comfortable right now that the price is appropriate for merchants. MasterCard, when they introduced the price for Maestro, we had some serious reservations about even offering it to merchants. But I have to give them some credit because they've since responded, I think, very favorably and have acknowledged that they're going to bring it down to the Interac levels, which right now obviously are virtually free.
TD, would you like to?
Sure. So we certainly talked to both card brands, and like Moneris, Visa had incented us to develop that capability. However, they've now also mandated acquirers as part of their operating regulations. We're subject to considerable fines if we actually don't support the Visa debit product. But I would also like to add that it is giving merchants choice. So merchants do have a choice whether they choose to accept Maestro in the case of MasterCard or Visa debit in the case of that particular
Can you
product.
describe that choice?
Yeah, so in our case, we will advise our customers. So we believe, as I said in my opening statement, in transparency, so we'll give customers the choice. So they will know that they've signed up for Visa debit and what the costs associated with that are.
Okay. One quick final series of questions, and this is about shifting the risk on debit cards. I've been advised, and I'm asking if your understanding is the same, that there will be a shifting of the risk with chip cards, meaning that merchants will be bearing more of the risk. And I'm seeing nodding heads. Is that your understanding as well?
I'm sorry. That's exactly right. Starting in October of 2010, both card brands have announced what's called a liability shift, and that is if you went to a merchant with a chip card, you entered your PIN, and then said that wasn't me. If the merchant doesn't accept chip transactions, they will be liable for that transaction, and that's done presumably to motivate the merchant to roll out the chip devices.
So there will be costs now borne to the merchant for accepting that risk, which could be huge, even though your interchange fees and other associated costs would normally have covered that associated risk. Now you're downloading it.
Well, in some respects, it's a bad thing for us, though, because if the merchant isn't able to honor the liability, the merchant processor or us or Just Business, for example, we end up absorbing that liability. So this particular rule is a very, very bad thing from the merchant perspective. It's more pro-consumer.
Thank you very much. Go ahead, Madam.
The payment brand. So Visa and MasterCard have announced a liability shift. It's something that's being done, and we're part of it.
Thank you, Madam Lewinsky. Thank you, Mr. Baumgartner and Mr. Dunhoven. Monsieur Laforêt.
Merci, Monsieur le Président.
Thank you very much, Mr. Chairman. And I'd like to thank you all for being here this afternoon. Now, as you know, we don't have a lot of time for our questions. I'm going to make a specific request in accordance with what you've stated in your comments. You've talked about transparency, and I'd like you to continue that now. Could you send us, and I'm not going to ask you to talk about this now because it will take up too much time, but Mr. Baumgartner, Mr. Van Dunhoven, could you send us a very complete picture of all of the fees, the various fees charged to the merchant by Visa and MasterCard, as well as by you, because you are the acquirers? Now, are these fees fixed or set? Are they percentage-based? We've heard a lot of talk about marketing fees, interchange fees, fees for foreign cards. So could you send us in a document of that nature? Because if I asked you to talk about it, it would be much too long. Is that something you could do for us?
Absolutely.
Oui, merci beaucoup, Monsieur le Président. Parfait. Une question qui s'adresse encore.
Now, another question. Are you charged fees directly by the financial institutions for credit or debit?
No. So what we are charged is fees from Visa or from Interac for processing transactions on their behalf.
The same is true for us in addition to MasterCard.
Oui. Vous chargez vous-même des
Now, you charge fees directly to the merchants. You're the link between the merchants and the card issuers. Your fees are charged to the merchant, and they're neither MasterCard nor financial institution or Visa fees. On what basis are those fees charged?
In my opening remarks, interchange comprises the vast majority of the fees that we charge. So we have those costs. I think Jim had mentioned assessment fees that the card brands charge as well. So those are two inputs that we have. And then we have our own direct costs. And we then have to determine how the merchant is processing cards, the type of cards they take, et cetera, and then we can determine a price to charge to that merchant, obviously being aware of what our competitors are charging in the market as well.
Yes. Now, the fees are negotiated individually with each merchant, but the vast majority of the fee would be the merchant discount rate, the fee that we charge to the merchant. From a cost perspective, the vast majority would be interchange, and then assessments, and then our operating infrastructure as well.
Visa et MasterCard ont tous deux affirmé.
Visa and MasterCard have both stated that they received no revenues from the interchange fees. Based on your experience, is that the case?
Their fee base for their shareholders is generated off of service or assessment fees, and that's included in our costs. So they will bill us quarterly based on our overall volume, and then we'll remit money to both Visa and MasterCard as well as Interac for their fees. And the card issuers do the same thing. So if you have a card issued by Desjardins, for example, all of your volume is added up, and Desjardins will pay issuing fees for those as well.
Donc, Visa.
So it's Visa that charges you fees, and you pass them on to the merchant then?
Absorbing them. It's a negotiation with the merchant depending on what the market will bear and what competition will bear. But yes, that's exactly right.
Dans certains cas.
In some cases. Is that what you're saying then, in some cases only?
Overall, as the interchange levels and the assessment levels have gone up, and actually, you know, as I looked at our numbers, our last audited numbers through 2008, the interchange had gone up at about a little over 2% a year, I think, in terms of the rate. And then our merchant fees had gone up a little less than about 1% a year.
C'est quoi la proportion de ces frais-là qui sont chargés par Visa et Mastercard?
And what proportion of those fees are passed on of the fees from Mastercard, Visa are passed on to the merchant? You must have an idea, a ballpark figure, based on negotiations. It must be an overall percentage. Is it 75% that's passed on, 80%? You must have an overall idea of that amount.
In the case of the fee increases, what percentage has been passed on? It varies by merchant, but I would say with the larger merchants, typically they tend to be priced at whatever interchange is plus so many cents per transaction. That tends to be how most of them are priced. Smaller merchants tend to have either a blended rate or a couple of rates. Certainly...
La question que je vous pose, dans le fond, c'est global.
Well, but what I'm asking you is about an overall amount, not individual rates. I'm asking for an overall figure. You're surely in a position to say that charges from or fees from Visa or Mastercard are passed on to merchants at X percent. Is it 25%? Is it 75%? How much is it?
Changes, about half the fees have been passed on to the merchants.
C'est la moitié des frais. Maintenant, j'aurais une autre question.
Now, another issue that was raised earlier. I'd like you to be very clear about the premium cards. Who pays the premiums? Is it the acquirers, the consumers, the issuers, the merchants, or the one that's providing the premiums here? Who is it, in fact, that at the end of the day bears those costs?
In our case, Visa charges the acquirer the extra 20 basis points for the Infinite card. So I get charged all of that for every Infinite card transaction that is processed. As Jim has said, we then have to negotiate with our merchants. So we collect that premium charge from merchants, from most merchants. Some I have contracts that didn't enable me to pass that charge on, so I am absorbing that cost. So I don't get anything extra, but I still have to pay Visa that cost.
Thank you, Mr. Van Dijnhoven. Merci, Monsieur Laforêt. Merci beaucoup.
Thank you very much, Mr. Laforêt.
For Mississauga Arundel, Mr. Deckert.
Thank you, Mr. Chair. Ladies and gentlemen, thanks for your presentations. We've heard from some of the merchant associations that some of the merchant agreements that they enter into with Moneros, TD, and others restrict them from disclosing the fees that they are paying for their services. Is that true of any of the agreements that either Moneros or, say, TD Merchant Services has with merchants?
And it's nothing in our agreement prohibits them from disclosing what they pay.
Okay. Is that same for TD?
So from a Moneros perspective, we do have confidentiality provisions in our terms and conditions, and those relate to the terms in our contract and also with respect to pricing. Yeah.
What is the purpose of that restriction on disclosure?
So the purpose of that is to ensure from a competitive standpoint that our merchants are negotiating with us, and I guess to the extent that the information is no longer confidential over the course of time, it becomes public. It wouldn't be continually subject to that provision. But from a marketing and competitive standpoint, our interest is ensuring that our merchants are negotiating in good faith with us with regards to price.
Do you think that the consumer has a right to know what the fee is that's being charged on the cost of the transaction?
Well, our price is different than the interchange rate, if that's what you're referring to.
I understand. I just there seems to be a major concern that consumers don't know what the costs of using a credit card are, and so I wonder what the damage to your business might be, if any, if disclosure were required of those fees.
I think I take your point, and I think the reality is with the now public information regarding interchange rates, consumers are increasingly aware of what the cost is, because as we've said, the biggest component of our price is interchange, and that information is now public. So perhaps more of a dated provision, in fairness, with respect to our agreement.
And I'd say if it hasn't come up with merchants, they haven't asked us to be able to discuss it, to my knowledge. But it is something certainly that I don't know that is still necessary in the agreements, and something that I think this whole process has taught us. We can do a little bit of self-reflection, and we can improve in certain ways. And I think that's a good example of a way that maybe we can improve.
Okay, I think that might be helpful. Do your merchant agreements restrict merchants from advertising a cash purchase price on their goods and services?
No, they don't.
Okay.
No,
None of your cases is. Do you collect higher fees for processing infinite or premium credit cards?
Yeah, we do in some situations, and in some situations we don't. It depends on the actual agreement with the specific merchant. Each merchant negotiates individually with us.
Is there a higher cost for processing the infinite or premium card versus another card?
The interchange is definitely much higher. This
technology that you use.
There's a substantial system investment from our perspective to be able to process the more complex cards, and so definitely.
And that in terms of the chip cards, what you're talking about, is that right?
Chip, as well as the more complex interchange structure, the premium cards.
I'm still not understanding that. What is it about an infinite credit card that costs you more to process the transaction?
The change in interchange from what was a very, very simple structure in 2001 to now, as Jeff mentioned, 21 or so Visa rates and probably an equal number of MasterCard rates required us to have a major system build to be able to handle those transactions.
Technology has to identify what kind of card it is. Is there any way that you could build into your system a point-of-purchase display that would then alert the merchant to the fact that it's a premium card on which a higher rate is being charged?
It's certainly technically possible. I think some of our merchants may have an issue with that, particularly those that deal with speed at the point of sale. Any kind of quick service restaurant, for example, would want to keep the customers moving and not slow them down to examine each of the types of cards. But it is technically possible, yes.
Okay. I still have more time. I wonder if each of you could let us know your views on the new credit card disclosure rules that were announced by the Minister of Finance last week.
So I think they were really aimed at consumers or cardholders. So as an acquirer, it really doesn't impact our business at all because there really is no impact to merchants.
Do you think these would be helpful to consumers and merchants generally, the disclosure rules that were announced?
Again, I don't think there would be an impact directly to a merchant customer. I think for consumers, I think, as I said in my opening statement, we believe in transparency. So I think more transparency is always a good thing.
So from that perspective, it would be an improvement. Do you agree?
Yeah, I think from a consumer perspective, as a cardholder, I think they were well thought through. I think they were good from a cardholder perspective. And as Jeff said, I think disclosure is something that we can all do better at. And so from that perspective, I would say yes. From a merchant perspective, I would say less impact, but as a consumer, definitely.
Okay, thank you.
Thank you very much, Mr. Deckard. Mr. Thibault.
Thank you, Mr. Chair. Thank you for coming again today. I want to jump right to a few questions that my Liberal colleague was asking a few minutes ago, and that's related to priority routing, and I would just like to get some clarification on that. Is that a system that's implemented now? or is that a system that's future planned, have plans to implement that in the future?
As far as what TD does today, we do not do any priority routing because we don't support MasterCard Maestro, and Visa Debit is not yet in market. So today we don't do anything. As I did say earlier, we will support Visa Debit, and the choice that Visa has made is to make that a consumer choice at the point of sale. So if a merchant has elected to accept Visa Debit, because that's important to mention, that a merchant has to elect to accept Visa Debit. So they choose to accept both Interac and Visa Debit. And if that is in fact the case, and then if a card is presented that has both the Interac and the Visa Debit application on it, then and only in that exact circumstance will the point-of-sale terminal provide a choice to the consumer. So the consumer can then elect to process that transaction as a Visa Debit transaction or as an Interac transaction.
I'd like to come back to have Maneris answer that question, but in relation to that, we had Visa Canada here last week, and I believe they state that if you have a Visa credit card, you're going to have to take all Visa credit cards or debit cards. So is this going to be true for a merchant if they choose not to take the debit card?
So Visa has elected to offer or enable merchants to elect to accept Visa Debit separate from credit. So it's commonly referred to as the honor all cards rule that Visa has, and they do have that rule. So if you accept a Visa credit card, you have to accept all Visa credit cards. But they've made the choice to say if you don't want to accept Visa Debit and you just want to stay with Interac, that's okay. But that's allowed.
Great. So Maneris, I'll go back to my first question.
Yeah, on the Visa side, exact same answer. We believe that method makes the most sense. We think the consumer should have a choice on how their transaction is treated. Our devices will prompt for it for the merchants that elect to accept it. We're very pleased that Visa has not elected to enforce the honor all cards rule. We think that can be problematic, particularly with respect to debit versus credit. On the MasterCard, so does that answer the Visa question? You're
Sure.
comfortable? On the MasterCard side, MasterCard has chosen a slightly different path. They've brought the cost down of processing the transaction. Their assessment fees are now actually lower than Interac's, which is positive for the merchants. But their method is a bit different in that the banks are instructing us to where to send the cards as opposed to the individual cardholders. So the banks are making the decision. From a merchant perspective, at this point, it actually matters less. In fact, in some cases, if they hold true to keeping the assessment fee at a competitive advantage versus Interac, it'll actually be a good thing from the merchants to the extent they're billed on a assessment fee basis.
So to get clarification on this, if this happens, I am the consumer, I have my card, I swipe it, I now have the remote or whatever the technical term is in my hand. I have choice, credit, debit, other. Other would be Interact, for example, because you still have to offer that as a merchant as well, correct? Now, if I choose debit, that's going to be priority routing. And is priority routing going to be higher if I choose debit rather than pushing other? Because other, to me, I don't know what other is. And will merchants then have to inform people where they should be choosing to push to make sure that the costs are low?
So in the case of Visa, it's a prompt. It's either Interac or Visa Debit. And the card you would use if you have a client card where you get cash out of your debit card today, you would be prompted with Visa for either Visa Debit or Interac. You can choose either one. It'll still go into your bank account. With MasterCard, there will not be a prompt under the way it's currently envisioned. This has not been rolled out yet. This is still being built. But the way it's envisioned, the transaction would not be slowed down with the prompt. It would go right through Maestro. If the issuing bank, if your issuing bank issues Maestro, and they instructed us to route those transactions through Maestro.
Just a point of clarity that might help. The instructions will actually be on the card. So when you get your debit card, your card will have already been predetermined in terms of a debit card, a MasterCard, or a debit card from a MasterCard bank that's also offering Maestro. The card will be predetermined in terms of how to route the transaction.
I appreciate the fact that it's going to be on there, but we've been hearing the issues with small print for the last few months, and once again we're getting another document with small print. So what we want to do is make sure everyone's informed. So if there's any way that we can actually change it from the small print to make sure consumers know, because the more we talk to consumers about interchange fees and all of the little fees that the merchants are paying, they're starting to understand the importance of not dinging merchants with their big premium cards along those lines. So I think that's an important piece. One of the things I haven't heard yet, though, is will the interchange or will the priority routing fees be higher than average regular Interact fees if I was choosing debit on Visa or MasterCard?
I'll start and have at it. With Visa, as it's currently envisioned, they will be higher because Visa has set their interchange level at a level that, in our opinion, is too high. But they believe there's value brought there, and there is value brought in both scenarios. For example, if you buy something online and you dispute that it was you, with Interac, you're more of an unsecured creditor. With Visa and MasterCard, they have a policy that will protect you. So there is definitely value there. In Visa's case, it will be more expensive, upwards of maybe 3 times more expensive on average. It'll vary by merchant again. With MasterCard, it actually wouldn't be more expensive because they've committed so far to holding consistent or lower than Interac.
We've heard from, I believe it's 250,000 members of the RCC, the 2.4 million from CFIB. They're all talking about the concerns that they have with interchange fees. I think instead of adding higher fees, we need to start looking at what we can do to be more transparent, so we can actually get everyone on the same playing field here.
Thank you very much. Thank you very much, Mr. Thibault. Mr. Rhoda.
Mr. Chair, and thank you for being here today. I was just going through here and I was listening to the priority routing, and the priority routing comes up, and just to clarify, it comes up on the terminal? Does it show anywhere? And I know you kind of answered this question earlier. I'd just like some clarification. I'm not 100% clear on how that works. I show up with my card. It gets swiped. Now, with priority routing, from what I understand, Visa or MasterCard, depending on who's programmed, gets that priority. And that priority, is that a benefit to the merchant? So how does it work, and who gets the benefit by that priority being there?
So I can start. The Visa debit, I wouldn't characterize as priority routing because the consumer does have the choice. So what will happen is on the point of sale dialogue, so if you think today when you use your debit card, it tells you after you've swiped your card, and in this case it would have to be a chip card, so it would only be applied to a chip transaction. So you've inserted your card. The terminal dialogue will actually tell you at that point in time to say, you know, do you want to pay by Visa debit or Interac? You will select Interac by pushing a button on there just like you do today. The dollar amount of the transaction would come up. You would confirm that, enter your PIN, etc., and the transaction would be processed. So you have, as a consumer, selected for Visa debit. As Jim has said, MasterCard has taken a different approach, and MasterCard has implemented priority routing. So the bank has issued a card that has Interac and Maestro on it, and if it comes to an intersect, so a merchant that actually accepts the Maestro MasterCard transaction, because again, that's important to distinguish, the merchant has to be enabled for Maestro. If the merchant is enabled for Maestro, there is no terminal dialogue in that case because the bank and the merchant have essentially agreed. The bank's issued a card to a consumer that will process it as Maestro, and the merchant has agreed to accept Maestro. So in that case, it gets priority routed to Maestro versus Interac.
So there's no prearranged agreement that automatically defaults to one or the other. It depends on the card, not on the merchant agreement with the bank.
It's on the merchant agreement with the bank, because the merchant has to agree to accept Maestro and or has to agree to accept Visa debit. So unless that happens, the transaction would not be processed through either of those two means.
Okay.
I'd like to come back to something else, and then we'll come back to the priority routing. But one of the areas that really concerned me was the shifting of liability. One of the features as a merchant was that when I'm taking in money through plastic, through a credit card or a debit card, you don't have to worry about the liability. You're basically selling your receivables and taking the money in, and there's no more worries. With the shifting of liability to the merchants, I'm concerned about two things. One, the cost of all of a sudden self-insuring, because that was one of the big features. But the other concern that I've heard is with the new technology, with the chips, I understand that there's some changes coming up to the terminals themselves. And for large merchants, that's an issue, it's a cost, but they can absorb it. For smaller merchants, who will be absorbing the cost for this shift, and do they have an option not to shift over to the new technology, and what would be the consequences if they don't shift?
And then Jim can certainly add. Getting ready for chip has been a very expensive proposition for all acquirers. So we've spent tens of millions of dollars preparing our systems because our systems need to change, and the industry has probably spent hundreds of millions of dollars buying new point-of-sale devices. So I know for TD Merchant Services, it's been north of $50 million over the last several years that we have spent our capital to purchase new point-of-sale devices that get deployed, because the average merchant ends up having a rental agreement with us. It's part of the service. So as part of the monthly fee that they pay for POS rental and servicing of that device, we've built in redundancy. So I'm sending a service technician out to that merchant site. We're deploying a new chip-capable terminal for them at typically the exact same or a lower cost than the old terminal that was out there. So we've enabled those merchants.
So there's no increase in cost to the merchant, is what you're telling me?
For the vast majority of merchants, no, there has been no increased cost.
Smaller merchants as well?
That's correct, yes.
Okay. I'll let you continue.
We've, the risk to the merchant with this liability shift that occurs in October 2010 only exists if there is not a chip-capable device processing that transaction. So our goal is to enable all of our merchants with chip-capable devices before October 2010, and we're well over 60% of the way there. So we've converted already 60% of our merchants to chip-capable devices, because again, as Jim said at the outset, if the merchant isn't capable of taking that risk because they don't have the funds on hand, or if they were to go bankrupt, etc., that liability falls to the acquirers. So the acquirers are not a fan of this new regulation either, but it's caused us considerable expense to go and retrofit our customer base.
Thank you very much, Mr. Deinhoven. Thank you very much, Mr. Rhoda. Mr. Brown.
Thank you very much, Mr. Chairman, and I want to thank our witnesses for being here today. My background is in the lodging and food service industry, so I'm quite familiar with what you folks do from a merchant standpoint. And I think that it's a really good thing that you're here, because we've been hearing much from the Canadian Federation of Independent Business. So I think it's great that you're here to explain exactly how you operate. Mr. Rhoda had some good questions, and I wanted to follow up on those. I want you to explain a little bit more about this liability shift and what that is actually going to mean for a merchant, and if you can possibly use an example, say in the lodging industry, that some of us might understand. Because I know that we've taken many cards over the years, and I don't think that all cards are going to be chip-enabled by 2010. Is that going to mean that the merchant is going to take on liability that they currently don't have right now? So the floor is open on this.
So if you owned a hotel, for example, and it didn't have a chip-enabled device, and if you were renting from either myself or Jeff or the other dozen or so competitors in the marketplace, we would, by October of 2010, send out a tech, and we would replace the device with a chip-enabled device. Once that chip-enabled device is in, then from the hotel owner's perspective, there's no increased liability because we've got a device in there. In fact, from a hotel perspective, you'll actually be better off because our data so far, at least, and the market hasn't been flooded with chip cards yet. But to the extent that we've had chip transactions, we can show that the number of disputes, so if you had disputes before at the hotel, that wasn't me staying there, et cetera, they've come way down. So from our perspective, from Moneris's perspective, we actually do support the introduction of chip in Canada. We think it's a more secure way of paying. We don't support the liability shift happening as quickly as it has. We think it's a bit of a burden on the merchants that is not currently needed, because to the extent, in the other extreme, if we hadn't replaced your device, or let's say you owned your own device as a hotel, let's say you purchased your device and you just invested in it, it wasn't chip capable, then if someone showed up at your hotel and disputed the transaction and said that wasn't me, and if you didn't have a chip capable device, then you'd lose that dispute. And so there is increased liability in the case where you do not have a chip-enabled device. But as Jeff pointed out, the vast majority of the devices that will be deployed will be chip-enabled by October of 2010.
But let me just go back to just 1 second on that. If you go to a hotel, generally what they do is they take an imprint of your card and you sign the registration card. So if there is a dispute, usually there's that sort of backup. And now, of course, with the chip and people putting in their PINs, then that's going to be double. But is that going to mean on cards that are not chip-enabled that other backup in terms of liability of someone saying that wasn't them staying, is that those hard sort of validators still going to be accepted?
That's an excellent question. That's exactly the point I was going to make, because your first question, I think you had asked, if the card is not a chip card, does the merchant have that liability? And the answer is no. It's no different than what it is today. So it's only if a chip card is presented at a non-chip capable point-of-sale device. If the bank or credit union or other issuer has not provided you as a consumer with a chip card, then the liability is the exact same, and you would do exactly as you've said today, that you would use your imprinter to prove that the card was in fact present for that transaction if there was ever a dispute.
I don't know how much time I have, but I do have one question that I'm sure many merchants will be asking as Visa debit and MasterCard debit or Maestro rolls out. Why would a merchant not want to accept those debit products?
In the case of Visa debit, I think they would like to accept them for contactless capability, so the tap and go capability, or for e-commerce or other card not present transactions. Those are new opportunities for them to use that particular card. The reason they wouldn't want to accept it is Interac works today at the point of sale for debit, and I think as I said in my remarks and Jim has mentioned, there is interchange attached to Visa debit. So at the point of sale, at this point in time, just on the pure cost equation, would be questionable whether they would want to take that card. And again, they'll have the choice to not accept Visa debit at the point of sale.
Visa debit transaction would be at a set fee or at a percentage fee?
So it depends on the acquirer. So acquirers determine the price. So today there is zero interchange on Interac transactions, but there still is a cost, obviously, to the merchants for us to process. In the case of Visa debit, the electronic interchange rate, so when the card is there, is 5 cents plus 25 basis points. So that is an increased cost for the merchant, but the acquirer still needs to charge for all of its other costs. So there will be north of that particular transaction amount.
Thank you very much, Mr. Van Dijnhoven. Thank you very much, Mr. Brown. Puis, Monsieur Vincent.
Mr. Vincent. Thank you very much, Mr. Chairman, and thank you for coming. Now, earlier on, you mentioned that Visa and MasterCard didn't make money on the interchange fees. Is that did I understand you correctly? Then how, if they don't receive any money from the acquirers or the banks, how is it that they set that rate for that fee?
Visa and MasterCard do not make money off of interchange. Their revenue model is driven off of assessment fees that are charged to merchant processors like ourselves, as well as assessment fees that are charged to the issuers as well. So it's in their best interest to try to maximize the flow-through of volume in the system. So the more charge volume that goes through the system, the more we end up paying in assessment fees, the more the issuers end up paying in assessment fees, and that's in their best interest. So what they have to do is try to balance the interchange rate and set the interchange rate in a way that maximizes participation in the system. And in that respect, they'll be able to get as much volume as possible. So things like the contactless debit, for example, as Jeff pointed out, those would be innovations that would bring more volume into the system, presumably generate more assessment fees, and make their shareholders happier.
Now, earlier you said that you had no say in the changing or modification of the interchange rates. How is it that you have no say in that? Even if you talk about volumes, if it was 1%, for example, you'd have no say if it were increased to 2%. You collect fees on every transaction, and you said earlier that the interchange fee or rate was too high. How is it that you haven't asked that question of Visa? Why haven't you asked them to reduce the interchange rate? Is there a reason why you haven't done that?
We actually did have some success with MasterCard. They had a model similar to what Jeff had described with Visa. In that case, we were able, with others, I'm sure, to convince them that a more competitive model was appropriate given their current situation. And they did listen. I'll give them credit for that. In the case of credit, I think their challenge, at least with the premium cards, has been trying to compete against American Express, which has historically had a higher-end customer, those that charge more. And so the worst thing that could happen in the system today would be if they weren't able to compete against American Express for those higher-end customers, if the interchange rate was too low, and banks decided to start issuing American Express cards, because those are much, much more expensive than Visa and MasterCard. Even the premium Visa and MasterCards are less expensive than Amex is today.
My last question is this. Since, as of October 2010, the chip cards, or in fact the merchants will bear the liability for transactions, you also said that you're going to be replacing the terminals for the card. Will there be fees associated with that, or will that be free of charge? Will there be fees associated with changing the terminals? And the second part of my question that goes along with that is, do you think that interchange fees might decrease with the liability transfer to the merchants?
In terms of fees, we're planning on no fee increases as a result of deploying the new terminals. We're not planning on that. In fact, our average fee, in spite of having done it, we probably have about 140,000 or so now chip-enabled devices at our various merchants. And so we're working on replenishing them by 2010 to make sure those that need them will have them. Our average rate, terminal rental rate, has come down over the last few years. So even though the equipment has gotten a little more expensive, the actual rate has come down. So the merchants won't bear, with one exception, and that is the merchants that own their own devices, and they tend to be the real large merchants. They'll have to upgrade. They'll have to purchase new equipment to be able to handle the transactions. They'll have to do work at their host. And this is a very, very expensive proposition generally for the major merchants, because a lot of them will own their own devices. In the case of the smaller merchants, we tend to own them and we tend to rent them.
Merci. Oui? Okay. Oui?
How much time will I have? Okay, 1 minute then. That's good afternoon, ladies and gentlemen. I'd like to come back to the premium cards. My colleague referenced that earlier. And we were talking about who would be taking on the additional costs for these fees. The coalition in Quebec is opposed to this because it is absorbing the additional costs, and you Jim stated earlier in response that sometimes you take on the additional interchange costs for the premium cards. Did I understand what you said correctly?
If we have a fixed rate for the merchant, then we end up eating the difference. That's right.
Well, since you operate based on profits, I assume that cost is passed on through your operating cost to the merchants. I'd like you to know that the coalition has recommended a set interchange rate like there is in Australia. How do you see that? What is your opinion of that proposal for your operations?
Well, in general, I suppose my view is that government-imposed price controls on businesses, tend to not work. This is it's more of a commercial dispute, and that I think the one of the issues that I'd have with it, besides having read a bunch of the studies, and there's pros and cons. I don't know if you've had a chance to read some of the studies, but there's a lot of cons and there's some pros to what they did, at least the studies that I've happened to read. One issue that definitely happened was because they didn't include American Express in that particular endeavor, it ended up benefiting them unfairly from my perspective, and also I think to the extent that you did that in this particular instance, and we had banks that migrated their issuing portfolios to American Express, the merchants would be in a much worse situation, because the average rate for American Express is much more expensive than it is for MasterCard and Visa, including the premium cards.
Thank you very much, Mr. Baumgartner. Merci, Monsieur Carrier.
Thank you, Mr. Carrier.
The venerable chair of our Standing Committee on Finance, Mr. Rajat.
Venerable. Thank you very much, Mr. Chairman. Thank you all for coming in today. I did want to address my questions to Mr. Van Dunhoven, because you've provided some documentation which I think is helpful here. And what I really want to do is to drill down to try to understand all of the fees that are being charged to merchants. You have, first of all, the Visa Corporate Commercial Business Card Transaction Fee, which, if I'm reading this correctly, that increased in this letter of February 2008. You have a Visa Infinite Card Transaction Fee, which is a new fee. Then you have a Visa Assessment Fee, which seems to be a new fee as well. And then you have the merchant discount rate, which interestingly actually decreases according to the documentation here. Now, the merchant discount rate includes, according to the information we have, it includes the interchange fee plus other costs. What proportion of the merchant discount rate is the interchange fee?
Again, it would depend on individual merchants. Depending upon how the merchant processes, the risk involved with that transaction. For example, an airline or a tour company or a furniture store, for example, any organization that has delayed delivery has increased risk. So it's difficult to increase risk for the acquirer. So it's difficult to say in total what it is, but on average. Yeah, it would be at least 75% probably of our cost is the interchange cost.
5% of the merchant discount rate is the interchange fee. And these three fees you have here that you've outlined, I mean, are those all included within the merchant discount rate?
No. So what happened when the interchange rates changed, they all are driven. There are differential interchange rates attached for each type of card. So a commercial card has a unique set of fees or interchange rates attached to it, as does an Infinite card, as does a regular consumer card. So what we've done is we've tried to articulate that and manage that so the merchant understands my costs have gone up, for example, 20 basis points for a Infinite card and 36 basis points for a commercial card. So we've tried to reflect that on the statement and pass that increased cost on in the example that we've shown.
And why is the merchant discount rate decreasing in this example?
Again, depending upon how the merchant was processed before, we did not pass through the commercial card transactions. As I said in my opening statement, in some cases we blended the rate. And as an example, we would have said, you know, the merchant discount rate was 2%. We may have now moved to, it's now 1.8% plus 20 basis points for Infinite plus 36 basis points for commercial. So we've tried to unbundle the pieces to better reflect the new structure that Visa had implemented.
So if I'm a merchant and I'm paying this merchant discount rate, my merchant discount rate may have in fact gone down. My interchange fee will vary because it's gone from 2 to 21 possible rates. But these three fees, if somebody does walk in with an Infinite card, in fact, they'll have an increase in the first type and an introduction of 2 fees that were not there previously on top of the merchant discount rate. Am I correct in saying that?
Yes, yeah, and it could be more fees. There could be standard fees that are charged, again, the way the transaction is processed. So there could be different fees that we pay. So the merchant can no longer say, I pay 1.8% as a merchant discount rate, and that's my all-in cost. As I tried to articulate in the opening remarks, that's the way it used to be. It was much easier for merchants. It was much easier for acquirers to go and levy those costs. Now, with the complexity, we've had to spend lots of money to ready our systems, and we've broken. The industry has typically tried to break out those transactions.
But has this complexity been imposed on you by the credit card companies?
Yes, they change the interchange rates. They don't consult with us to say what do we think. They've changed those.
You as companies preferred the much simpler system that was in effect before.
It was certainly, I would have preferred to stay there before, yes, because we had to spend considerable sums of money, and clearly merchants are upset with the increased costs associated with it.
If I could just add, there are actually some good instances where varying interchange makes sense in my experience. I don't know if you have government like travel cards when you travel. And if you don't have government travel, okay. Well, if you do, I used to work on the issuing side in that particular space. It used to be Diners Club and American Express had a lock on the market, and when Visa and MasterCard introduced different interchange rates for those particular products, they allowed issuers to compete against Amex and Diners Club in that particular space. And so, and then in some cases, not here yet in Canada, although I would argue it would be a good thing. When merchants pass additional data along about, like in purchasing card, I think you have a purchasing card program, additional data that helps companies streamline their costs, there are arguments for tiering interchange to incent merchants to do that. So it's not as though a more complex interchange system is inherently bad, although overall it has made our lives a lot more complex.
Okay, well, unfortunately, my time is up, but I appreciate this, and any more information you have explaining to members of this committee all of the fees that are new or increased or that apply to merchants that go. We have a fairly good explanation of the four-party model, but still any more information you have would be helpful on that. Appreciate that.
Thank you very much, Mr. Rajat. Mr. Thibault.
Thank you, Mr. Chair. Just going back to that one question that I wanted to get in, it was relating to priority routing and the new terminals. Will merchants have to get involved with that? Do they have the option of staying out of priority routing and just taking and keeping the current system, or will ultimately that be the new system that's phased in?
If merchants do not want to accept Maestro, we certainly would never force them to do that. We will turn it off.
And with Visa? Because Maestro...
So Visa will be a prompt at the point of sale, and also the merchants will have to elect on whether or not they want Visa debit or not as well.
Okay, thank you.
As long as, if I could add, Visa sticks to the non-enforcement of the honor all cards rule, which is very important in that answer.
Okay, thank you. I just want to jump a little bit. It relates to liability and some of the fees that we've been hearing about. I was interested to notice in following the collapse, and I've mentioned this before, I believe it was in April of Conquest Vacations. They talked about unrealistic and unreasonable demands by credit card processing companies as one of the determining factors. There's also a piece in the Globe and Mail that was talking about credit card processors making them hold on to $900 million. I think there was some resolution to that. I'm not sure. But can you maybe talk to that point? I'll open that up. Talk to the point of having to have this cash in reserve and then the companies coming out saying these quotes.
I'd love to, and thank you for raising the question. In the case, I'm going to distinguish between an airline and a travel agent because there are government agencies involved in the travel agency business, but in tour operator business. So in the case of the tour operators, TICO, if you're familiar with, and there's a fund in Quebec as well that protects the travelers, they will require the tour operators to place on deposit funds. And so the tour operators have to place on deposit funds for future trips. So if you buy a trip to Cancun in June, for example, and it's $1,000, and let's say you buy it on a major tour operator, that tour operator will have to place it in a trust fund. However, if that tour operator were to fail, and let's say we were the merchant processor, you would dispute the transaction with your card issuer. We, as the merchant processor, would end up absorbing that charge if the tour operator was out of business. So we require, in the case of the more challenged tour operators, deposits as well. So the tour operators are being doubly penalized because the funds are holding money that ultimately, if it's charged on a credit card, the merchant processors get charged with. And that's a real problem for the industry. And if there's anything that anyone can do to help that particular industry out, they really need the help. And I think Conquest was, in part, a victim of that particular situation. In the case of the airlines, there is no such regime. So we process for both. In the case of the airlines, if we have a great big credit department that would look at the risk. If you own an airline and your airline was profitable, had plenty of cash, et cetera, we may not require a deposit. If you were more challenged or going through some tougher times, we may require a deposit to protect against the risks that I alluded to earlier. So, yeah.
Okay. Can I add something about Conquest Tours?
Sure.
If you've ever noticed in Canada, you can't buy an airline ticket in this country unless you have a credit card. If you don't have a credit card, you can't buy an airline ticket. It's the only country in the world like this. So if you really want to help that industry, what you need to do is you need to help people use their money to be able to make that payment online. So Air Canada, they need the help of Use My Bank so they can accept payments from their customers in real time at a rate that's going to be competitive to Visa, MasterCard. Instead of so many regulations, we could have competition help drive those prices down. The technology has been here for 10 years, and we're the only country that's not using it. We've got Visa and MasterCard. They want to have the entire market to themselves. But we've got online banking, and we have customers that want to receive those payments. There's really nothing in the way of making it happen. If you buy a $5,000 trip, you don't have to pay 3% to Visa to get that job done. It can be done a lot less than $150 on that transaction. That's what we're talking about at Use My Bank. We're only in the online world. And when you talk about point of sale, it's a place that we're not at. But in the online world, I think Canada needs to have some more ability for the customers to, if they want to make a cash payment, they should be able to make it if they decide to. If they decide they want to use Visa, then they can use Visa. But we need to have more choices, I'd say. And Conquest Tours, I think, could still be in business if they had that edge, that competitive edge to offer their customers the ability to accept a debit payment. Because 30 to 40% of people don't have Visa MasterCards. So if you don't have a credit card, you can't shop online. It doesn't seem fair. It seems like you need to be able to have two systems that reflect the same values in the physical world, where you can shop with your cash, your debit, and your credit. But when you go on the internet, it's just all stuck with credit cards. And so I think Canada needs to have some kind of regulations or something in place that allow for the merchants to be able to accept cash payments from their customers that decide they want to use their online bank. Makes sense.
Thank you very much, Mr. Crozier. That was helpful. Thank you very much, Mr. Thibault. Mr. Lake.
Yeah, I want to direct my questions to Mr. Van Dijnhoven. Regarding this letter, I'm going to go back to the letter here and the statement that you provided us as well. I'm not sure that I'm any more clear, having been provided a sample statement in terms of the flow of information, but maybe you can help me with this. First of all, to the letter, though, you mentioned the letter is designed to kind of clarify situations for customers, but I noticed that you use an example in your chart. You talk about the Visa corporate, commercial, and business card transaction fee, and you use an example with this fee change, a $75 transaction processed by your business will cost about 9 cents more than the current calculation. I think you're probably using that example to show that it's not much of an increase. But then with the Visa Infinite card transaction fee, which is a new charge, 50 basis points, there's no such example but I would note that the same $75 charge there was easy to calculate using your number, and it looks like it would be about 37.5 cents more that they would pay on that. Why would you not have an example there?
That was, it's a great point, and several of our customers pointed that out to us as well. So that was essentially was a miss on our part.
Yeah, it just seems that oftentimes the miss happens to be when it's to the changes to the detriment of the customer.
As I said, you know, we pride ourselves on transparency, and when we look at what some of our competitors had done, you know, we think we still are very transparent with that. We've clearly articulated, you know, in this example, it was a 50 basis points extra. But you're right. We've learned as we've gone through some of this. Some customers don't understand what basis points mean. You know, we didn't put a tangible example in that particular case.
Okay, and I think it just illustrates the importance of the communication and some of the challenges here. The extra charge, I'm curious with the Visa Infinite transaction fee, because some people have talked about 20 basis points or something. In the letter it says 50 basis points. Is there an extra charge? Does TD make any, or TD Merchant Services make any extra money, charge extra for any of your clients for when they use Infinite Card?
Yeah, so in this particular example, it was a 50 basis point charge. And to answer your question directly, yes, some merchants pay more than the 20 basis point cost.
Merchant Services is actually making more money now. It's not any more complicated for you to transact that, to do that transaction, but you're charging a surcharge on top.
We're charging a surcharge on top because, as I said in my opening remarks, those changes were millions of dollars for us to process, to change our systems to be able to process these incremental cost transactions. So we need to be able to recoup our costs as any good business person would, look at the cost inputs and say, how can I do that, and do it in a fair and transparent manner, and that's what we've done here.
It's largely an equipment cost.
Equipment and technology costs, less on the equipment side because it's not the point-of-sale device, it's more our own internal processing systems.
Okay, okay. And that was where I was actually going to go, was on the point-of-sale devices. I'm going to move to the other statement that you have here, and just sort of, if we could just walk through quickly sort of who sets what and who gets what. Now, first of all, just to clarify, on the point-of-sale devices, I noticed there's a rental charge of $35. Is that per handheld setup?
So yeah, this is again an illustrative statement. So customers' fees will range depending upon the individual negotiation with that merchant, the type of equipment that they have. Do they have a standalone point-of-sale device? Do they also want a PIN pad attached? Because in that case, I have to buy two component pieces. So it really does depend on the individual client preferences that they need and require to run their business. But we
at the very top of that summary of fees, that goes to Visa, right?
No. So that is what we have called the merchant discount rate. So we are only a Visa acquirer, so we process transactions for MasterCard, but we don't bill for the MasterCard transactions. It's a complicated, unlike Moneris, who...
This person, this sample person here, or company here, would actually get a separate statement for MasterCard as well.
Statement for MasterCard, right. And okay. That's really the legacy out of the Competition Bureau previously not allowing duality in Canada. They've since lifted that restriction last November, but currently this is a legacy of that. So we process Interac and Visa transactions for our merchants directly.
Okay, so Visa discount fee is set by Visa.
No, that is our merchant discount rate. So the fees that are set on here are all... We've elected to pass those fees on, or there are components of those. So the Visa discount rate is set by us, by TD Merchant Services, and that's the charge that we levy to the merchant for processing their Visa credit card transaction.
Thank you very much, Mr. Lake. Thank you very much, Mr. Van Duynhoven. Mr. McTague.
And thank you, witnesses, for being here. I apologize. I was out for just a few more minutes. Let everybody know the price of gas is dropping a penny tonight in some parts of the country. But outside of the country seems to be a concern, as Visa and MasterCard have made an attempt or are attempting to get into the debit business. I think it behoves some of the members in the committee here to actually find out whether or not you're aware of any process by which the debit clearing will take place
outside of Canada? Is there a risk? I asked this question to Mr. Stanton. He said no, but I don't think he gave a very clear answer to my satisfaction, certainly that of my colleagues. Can you absolutely guarantee that the clearinghouse for processing debit will not take place outside of Canada, bringing forth obviously concerns on the Patriot Act, our own privacy laws? Mr. Van Dunhoven?
I can say that as far as what we do, we process those transactions. Everything is processed in Canada. We don't send information outside of Canada. However, we do send information to Visa, and Visa is a global company. So, but we transact with, in a technical session, we transmit information to Visa on our premises. So we give it to a Visa server, and then they take it over their global network. So where that transaction routes, I can't definitively say, and I think the same would be the case for MasterCard as global organizations.
So we can't be sure that, in fact, will find itself, for instance, in the United States or under the jurisdiction of another country.
Credit cards are processed globally today. I would say I can't be certain, no.
Mr. Baumgartner?
Yeah, my understanding, and we can confirm with you, but the way the electrons flow, I believe, is exactly how Jeff alluded to. I think those servers, in the case of Visa, would either go to McLean, Virginia or Denver. And in the case of MasterCard, I believe it goes to either St. Louis or Kansas City, and then back, I believe. But that's something that we should confirm with you, or perhaps we can ask the card companies to diagram it out for us.
I think that brings a whole level of interest. This committee will certainly want to look a little closer at that. I just want to refer to something you said a little earlier, Mr. Baumgartner, in connection with the comments by my colleague with respects to the priority routing and the new machines, the point-of-sale machines alluded to by Mr. Lake. With the advent of chip cards and the probability of there being pervasive in the next few years, how likely is it a merchant will be able to refuse, practically speaking, the use of the new priority routing machines? You said earlier that they may not have that option. They have the option of not having them, for instance, Maestro. But given where we're going with these cards, is it not likely that saying no would also mean saying I'm out of business?
In the case of chip cards, they'll essentially replace the mag stripe cards that we have today. It's the intention of Visa, MasterCard, as well as the Interac issuers as well, to gradually replace all of their cards with the chip technology. We have found, from a merchant perspective, the chip technology to be a positive thing. We found disputes and issues between it wasn't me type transactions to have gone down. Most countries in the world are moving towards chip. We have a sizable presence in the U.S. We're trying to encourage the U.S. to go to chip as well, but most countries, including most in Europe, have or are moving to chip. France has gone there a long time ago, and it's chip and PIN, which we believe ultimately is the most secure.
Baumgartner, using existing modems would not work. You could not use the same machines. I think you know what I'm driving at.
Yeah, you're exactly.
Let's be honest. We're dealing with new machines required. Merchants will not be able to refuse. It'll be akin to saying, I don't want to stay in business if they're not able to accept the new chip technology and the cards and fees that go with it.
No, yeah, no. That's not quite accurate, depending on the type of merchant. So if you were a merchant that had very little dispute activity, so a good example might be if you own a restaurant where almost no one disputes the fact that the meal wasn't good, or et cetera, where the returns are very, very low, you may not actually need a chip device, because please keep in mind that the actual cards themselves will still have a magnetic stripe on the back. So, for example, when you go to the U.S. or anywhere else that doesn't take chip cards and you want to buy something, you'll still have a magnetic stripe. You'll need that, or the issuer will need that, for you to be able to buy something, for example, in the United States. So we will still be able to process mag stripe transactions as we have U.S. customers coming to Canada and using the machines.
Baumgartner, a very, very simple question to you on a very complicated case. I have someone who's reported to me a problem they have with respects to fees have been charged for non-qualified purchases. It would appear that the charges were placed in the wrong item on the bill, some for qualified, some for non-qualified. I'm wondering, given I can give you the example that's here, what does this mean as far as card acceptance is concerned for merchants when they don't know how large the volume is of non-qualified or non-qualified volume of cards? their concern by a number of these companies is that the line items in which something may be charged may not reflect the actual number or kind of card they have, and they obviously have no right to refuse. How do they get around that conundrum, and do you have instances where you may be charging on the wrong line in terms of the bill you're providing them?
We don't believe we do. We also have reporting that would delineate out every specific transaction for the merchant to be able to review, and it would indicate whether or not it was a qualified transaction or a non-qualified transaction. So in the case that there was an error made, we'd certainly make sure we corrected it. But yeah, thank you.
Thank you very much, Mr. Baumgartner. Thank you very much, Mr. Mateg. We're now going to the member for Burlington, Mr. Wallace.
Thank you, Mr. Chairman, and thank you for coming this afternoon. Very interesting discussion. I'm going to stick to the TD approach, so if you want to get it out, I'm going to go over it, because the issue that we've been hearing from merchants thus far is about how complicated this is, and you didn't make it any easier today. So if I'm looking at the statement under summary of fees, is the interchange rate in any of these fees that I'm seeing on the bottom here?
The interchange rate is not listed on there, but it is, as we said earlier, the largest component of the fees that make up the Visa discount rate.
So it's not listed in there?
No.
So when I took the 824, and I have no idea what you do with the direct payment sales or the chargebacks. I know what they are, but I don't know what you do with them, and or the returns. So when I did the math, it came to 2.18.7%, but that does not include the interchange fee. Is that correct then?
There is no other fee. If you've taken the 824, that is the total amount that we have charged that particular merchant for that.
So that includes that one. That
includes all the fees that we would charge to the merchant.
So how do you treat to the merchant the direct payment sales of $9,600? Do they get charged down here for the transaction of that, for each of one of those 224 transactions? Is that part of that down here?
Yes. So in the example, we've got summary of fees. You see an IDP, or Interact Direct Payment Transaction Fee. So the example was at 8 cents a transaction times 224 is, roughly $18.
All right. So for me to do the math, if I add up all the transaction numbers at the top, divided by the 824, it's approximately my costs per transaction, depending on what the transaction might be. But that's basically what.
If you were trying to work it out to an average discount rate, then yes.
Like if I'm planning my business, I need to know approximately. Like I'm pricing this. I don't eat it. I have to pass it on to my customers, so I have to have an idea of what I'm paying, so I can pass that on. So okay. So the first fee, the Visa discount goes to you, right? Goes to
all these fees come to us.
Yeah, but
we collect
this one
all
goes
these
to you. The transaction fee is for the 224, so that's the fee I'm paying, and it's 0.08, right? I got that. That's your total. Your POS machine, is that at $35? Is that $35 a month?
Yes. Again, the example. So it might range anywhere from $20 to $35 a month for the rental of the device. Again, as I said,
can you buy them?
You can buy them.
You can buy them. Eh?
Yeah.
What are they
worth? Most customers like the opportunity to rent from us because we have what we call a 4-hour service promise. So we promise, to at least 90% of the time that if you call us and your terminal breaks down, we'll be on site with a service technician. We have 250 service technicians across the country.
Okay. I understand the taxes. The Visa assessment fee, and that's a percentage that's negotiated between you and the retailer?
So in our case, it is the straight pass-through of what the Visa assessment fee. So Visa charges us 6 basis points plus GST, and that's what the 6.3 basis points reflects.
And then the next one is the discount rate adjustment fee, and then it's $68.15 in your example, and then we go to you explain what that is on your next page, or your 3 pages later. Can you tell me the difference between Canadian Infinite Standard, Infinite Electronic, I guess that is, commercial standard and commercial, like what's the difference between standard and electronic?
So there are different types of transactions. I mentioned the way the merchant processes those transactions. So an electronic transaction is either one that is swiped, so the card is there, or if it's a chip transaction where the chip is inserted into the terminal. So those are, we know the transaction was there, the card was there, so they're less likely to be turned down. Standard transactions are where the card is not present. So I mentioned e-commerce transactions are standard because you're purchasing at a website and the card is not physically at the merchant's location. So Visa actually has differential interchange rates for those transactions. And so we break out all of those card types out where we've charged a premium for those card types.
Okay. Thank you very much, Mr. Walst, and thank you very much, Mr. Van Duynhoven. Puis, Monsieur Carrier.
Mr. Carrier. Welcome again, and I'd like to continue along the lines of the questioning that I was on earlier with the premium cards. And I talked about the recommendation from the Quebec Retailers Association. You said that you don't really agree with their proposal because you're more in favor of free competition. Now, I'd like to ask you your opinion. Because you process the payments, using a credit card is practical for people. So, to my mind, people will always continue to use credit cards because they're very practical for everyone. So, I have the impression that you won't lose in the exchange if the interchange rate were a set rate. So, could you please explain to me why you disagree with a set interchange rate or a regulated rate? With the maximum established for it.
That are out there, including commercial card products, et cetera, have different behavioral characteristics. And I think there is a place. This is my view. I think there is a place for different interchange levels in the system to incent different types of behavior. I also believe that absent including American Express in any of those discussions, we would have an unintended consequence if we impose the Australian example. And that could be that the issuing community decides that it's in their shareholders' best interest to issue American Express cards as opposed to Visa or MasterCards, because the fees that are charged on those cards and the fees that the issuers would receive from those cards would be dramatically higher than what they're even currently receiving today. And so I think a combination of those two things, as well as potential, and I don't know for sure, but the potential for decreased innovation with things like contactless, for example, things like chip, which again I believe is a very good thing for the Canadian consumer, just from a data integrity perspective. Examples like that, I think, are driven in a free market, and I don't know in a more constrained market if we'd have that type of innovation here.
It all sounds fine the way you're explaining it, but the position of the retailers is that they're the ones that are absorbing the additional costs for the use of these premium cards. So in the end, they're the ones that are facing the problem. Of course, you're not affected by it, so it's all fine and well for you to talk about free market, etc. But there is a problem that needs to be resolved for the merchants. So if you could address that aspect, and could you also express your views about including American Express in a set interchange rate?
With respect to the premium cards, you know, one of the things that that I did look at more recently is the difference in behavior. So are the premium cards, do they have different behavior characteristics? And the answer is they actually do. I think MasterCard mentioned they have a minimum or an average spend in their portfolio of $24,000 a piece to qualify for a premium card. And when I looked at the behavior across our merchant categories, and this was just last month, so it's only a month's worth of data, the average transaction size of those particular cardholders was markedly higher. It was a lot higher than I would have suspected. It was between 10. The lowest was in the gas station category. Their cars were a little bit bigger, but they didn't spend that much more. A little bit more on food, all the way up to as high as 40% in certain merchant categories. So it is clear that those particular customers are bringing more value to merchants, but at the end of the day, it's costing merchants more money than what they're used to paying for. And so that, I think, is in large part why we're here today, because the increases were, much more aggressive than I think anyone was expecting. And no one really had a good sense of how many premium cards there would actually be. The merchants couldn't budget for them. And I think that's definitely caused some issues, and I think your association is a great example of those issues.
Thank you very much. Thank you very much, Mr. Baumgartner. Merci, Monsieur Carrier.
Thank you, Mr. Carrier.
This ends our rounds of questions and comments from members of the committee. Thank you very much to our witnesses for appearing. Your testimony will be useful to us in forming our report. We're going to suspend for 2 minutes to allow witnesses to depart and audience members to depart so we can resolve back in camera to discuss future committee business. Meeting is suspended.